All right, guys, so let's talk about the top 10 retail investor type stocks. Those are stocks that you and I are buying. And this month, the list is just absolutely bonkers. Like, basically, shocking is the word. And there's some big changes at the top of this list. So let's talk about each one of the stocks individually, and I'll let you know whether or not I'm going to pump it or I'm going to dump it from a long-term buy and hold investor's perspective. That's the perspective I'm looking at there, guys. There could be a trade there. I have no idea. You guys know I'm not a trader. I'm a long-term buy and hold investor. So that's the angle that I'm looking at all these stocks at. So if you like it when I cover a bunch of stocks like this all at one time, all in one video, make sure you hit that like button so that way I know that you guys enjoy that style of video. And I'm finally kind of figuring out my groove with my new channel where I want to discuss early retirement, how to get there. It's completely different than what you guys think, completely different than anything I found out there on YouTube. So make sure you check it out. It'll be the pinned comment down there, and check out that new channel. If you're interested in early retirement or retirement at all, if you happen to be behind, this is actually better for a lot of you guys that may be behind in your retirement. So make sure you check it out. It'll be the pinned comment down there, along with the sale that is going on for my group. And it ends this weekend, guys, for the cyber sale, where the discount is bigger than any discount I've ever given before. So make sure you check out the pinned comment down there. I'm not going to get into it here. We don't have time with this video, but make sure you check out the pinned comment down there and see everything that's included with that membership. All right, so right off the bat right here at number 10, we have a stock that hasn't been on this list in a while, and that would be GameStop. I'm used to seeing AMC and Ape and all that other stuff on here, but it's been a while since GameStop's been on this list. But it's kind of creeping back into that top 10 again. Now, I have no idea why. I have no idea what's going on with the Wall Street bets or, Reddit or any of the other stuff that's out there. I have no clue. I don't follow any of that. I'm not keeping up with it. Maybe it's catching steam again. Who knows at this stage? But I know for me, it's a dump it. The stock is not worth what it's worth right now, much less trying to play it for any sort of hype run. There may be a trade there. I have no idea. Again, I'm not a trader, guys. But for me as a long-term buy and hold investor, I want nothing to do with these games. It's pure speculation. So not for me at all to dump it in my eyes. Coming in at number 9 would be Meta. And you guys know I've been pumping it since it was 80 bucks. It's still undervalued to me a little bit. Obviously not nearly as undervalued as it was when it was at $80, but it's still undervalued in my opinion. This is a pump it. I think they're setting up for a big year next year. So it's a stock I want to own at 80. I want to own at 150, 200, 300. It's a stock I want to own long term. You might not like Zuckerberg. I get it. You might not like the products. I don't use any of their products, but as an investment, it's an incredible investment. There are very few companies that print as much cash as Meta does, and they're kind of just at the beginning of monetizing a lot of their platforms out there that have billions of users, guys. So understanding the business case behind Meta is the reason why it's a pump it for me, and it's the reason why I continue to own this stock and probably will for the foreseeable future. So stock number 8 is Disney, and this right here is one of the most controversial stocks in the stock market. It's gotten caught up in all sort of political BS. It's gotten they have business problems as well, which is kind of like a double whammy at that stage. Bob Iger's come in. He's done some good things. He's done some not so good things. It's just a very, very interesting stock. So for me, I own just a little bit of it. Whenever it dipped down into the 70s, I had to buy a little bit of it there. And that right there was for my dividend portfolio. It was kind of the risky, crapshoot kind of play for that dividend portfolio there, kind of hoping for a big upside, which we've gotten a big run since I bought up in that stock. But that does not necessarily mean that it's not necessarily running a little bit hot right now, especially with all the business problems. So for me, it's a cautious, slight pump it, but I definitely would be cautious with this stock because there's a lot of downside risk. But more importantly, there are business problems. I don't care about all the political BS. You guys know I don't get into that at all. I could care less. I do, however, care about the business, and there are business problems, and there's a lot of them that Bob Iger has to sort through in order to get this back to where Disney was prior. So until that happens, it's definitely just kind of a cautious, understand what you're getting into there. It's a high risk, high reward play. So moving on to stock number 7, and that would be Nvidia. And guys, I don't own the stock. A bunch of group members do because they were all over it when it was in the 100s, man. I mean, the discussion every day whenever it got into the 100s was just utterly ridiculous in my group. I don't own it personally, but they continue to just blow up and have incredible quarter after incredible quarter after incredible. I mean, like top 10 all-time quarter type of quarters every single quarter now for the past 3 quarters. So I can't say anything but pump it because performance is what matters, and they continue to not just perform incredible, just otherworldly at this stage. Now, how long that can last, who knows? But for right now, every time you bet against them, they've come right in and just basically smashed you deep into the ground. So right now, for me, it's a pump it until their earnings prove otherwise. Coming in at number 6 is AMC, and they made a massive move up this list, basically from last place all the way to 6. So again, I don't know what's going on there. I don't know if it's just more of the Wall Street bets crowd kind of starting to pile into trades again. I have no idea there. You guys know for me, it's overvalued. The management team is just a complete mess. It makes absolutely no sense. You tell me why a theater chain needs to own gold mines, and I don't know. If you can explain that one to me, then I guess there's a business case there. Maybe it's a 6D chess move or something else ridiculous like that. I'm highly doubting it though. So for me, it's just overvalued based upon the numbers, and that's all that matters to me in the end is what earnings tell me. And so for me, it's a dump it. I don't want any part of this stock. And I know, go ahead and blast me down in the comments, guys. Those of you guys that are all over the AMC train, I'm okay. I understand that. We all have differing opinions on that. And that's part of the beauty is we can disagree on stocks and we can both actually win choosing different stocks altogether. That's the beauty of investing. That's why I love it. So go ahead, let me have it down in the comments. It's okay, guys. Coming in at number 5 is Ford, and it made just as big a move up as AMC did. So again, I'm not sure what's going on there with Ford. It definitely isn't part of any of the Wall Street bets movements or anything like that. But I know for me, I don't care what PE Ford's trading at. I want no part of this stock. For me, it's a dump it. It's a terrible stock in terms of a company. I understand a lot of folks like Ford vehicles, the Ford F-150. It's a very, very popular vehicle. I'm not disputing all those things. But when you look at the actual financials, there is not a lot to get excited about at all. And so for me, and they really have no ability to change that either. You can't get rid of all that long-term debt. You can't get rid of all the pensions. You can't get rid of the unions. There are so many things and so many albatrosses kind of hanging over this stock that for me, there might very well be a trade there. I have no idea. But as a long-term buy and hold investor, this is not a stock I want to be in at all. So coming in at number 4 is Microsoft. And guys, Microsoft's had one of the best years they've had in a very long time. They continue to execute at a very high level. They continue to branch off into new products. They're winning in every way this year. They have executed wonderfully, and they've executed wonderfully for a while now, but this year has really, really been exceptional. So for me, it's a pump it. I really like Microsoft. I don't own it personally because I own so much Apple. I feel like it's almost redundant in a way to own more Microsoft or to own Microsoft in the first place. But hey, if somebody wants to buy Microsoft over Apple, I have no issues with that whatsoever. And it makes perfect sense to me because Microsoft is just a great company. Coming in at number 3 would be Amazon. And guys, you guys know it's a pump it for me. We were buying it back when it was in the 80s. It's a little bit, I'd call it a little bit fair valued, maybe to a touch undervalued or touch overvalued, excuse me, right now. But I would be buying Amazon on any weakness if you don't have your position filled out, because there's no doubt in my mind they are not only here now, they're going to be here in the future, and they're doing things right now that position themselves for a massive future for the next big leg up in this stock. And that's exactly how this stock moves. It kind of moves up, it plateaus for a period of years in some cases, and then it makes another giant leg up when all this money, they basically pour all the money that they make back into the business. That's why the profitability numbers don't look so great. That's why the PE is so high. And so when you kind of understand how management, basically uses their financials and uses their money, once you kind of understand that, you kind of see exactly what they're doing right now and exactly what they're setting themselves up for in the future. So unless you think Amazon can't execute to that future, to me, this is 100% a pump it. Just understand where the stock is right now in the valuation curve. And number 2 would be Apple. And you guys know it's my favorite stock of all time. It's a pump it, but I'm going to say pump it with caution because it's still a touch overvalued, and they're going to have a rough, next 6 months, next couple of quarters at least in regards to the numbers. They've already told us that. And so you've got to kind of understand that you are paying a premium for Apple. Obviously, there's a reason why you're paying a premium for Apple. There's a reason why it didn't crater last year like everything else did. So you got to kind of understand the good and the bad with that. It's trading at a bit of a premium right now, and there isn't a whole lot in the near term, basically the next 2-3 quarters or so, that are going to be massive catalyst up unless something's announced out of nowhere. But as of right now, there's nothing out there that's going to be groundbreaking or anything else like that. So we could very well see more weakness in Apple over the next few quarters. So for me, it's a pump it, but it's definitely be cautious with this one. And making the biggest jump of them all, basically, guys, you can't make this up. This is the biggest jump of the entire group. The stock that's coming in at number 1 is Tesla. You guys know I'm a Tesla bull. I let the Tesla bull on my channel to discuss Tesla, despite the fact he's completely over the top. And I know I get a lot of heat because I try to be realistic with Tesla and not just say Tesla to 900 tomorrow, whatever the case is. So for me, this is definitely a pump it stock, but with caution, because Elon has told us the next few quarters are going to be rough. And so I think we're going to see a lot of volatility, a lot of big runs up, followed by a lot of big moves down. And you just have to understand that's just part of the ride with Tesla. If you can stick with it, accumulate shares as it goes on these massive dips that it's definitely prone to do. We've seen it over and over and over again for a long, long time now. If you can ride those things out, whenever they finally are able to turn the corner once again, it's due for a big run up. So for me, Definitely a pump it, but you got to understand what you own and understand and have a lot of caution with it and be patient and understand the roller coaster ride you're signing up for if you decide to own Tesla. And if you want to see all my buy and sell alerts on some of these stocks that were on this list today in real time, you want to see my watch list complete with price targets for a lot of these stocks on this list, and you want to take 5 courses for free, use our stock analyzer tool for free, get access to myself anytime you want, slide into my DMs, jump on our live Q&As, be a part of the best 6, 7, and 8 figure Discord out there, get 3, 4, 5 videos a week just simply for the group, nobody else, and a ton more. Make sure you check out the pinned comment down there and take advantage of the biggest discount ever for my group and jump on in there before the sale expires and the price goes up forever. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.